Hey everyone, welcome back to Corporate Decoder. Today we're diving into American Rebel Holdings' latest 10K filing. And let me tell you, this one's a roller coaster. It's like watching a patriotic action movie where the hero keeps tripping over the budget. We'll break down the good, the bad, and the somewhat perplexing financials. This report paints a picture of a company at a crossroads facing some serious challenges, but also hinting at potential for a turnaround. First things first, let's establish that there are no documents incorporated by reference. What does that mean? It basically signals that all the information we need is right here in this report. Okay, so what does American Rebel actually do? They see themselves as America's patriotic brand, designing and selling safes, personal security products, apparel, and even beer. They're really leaning into that whole American independence thing. Now, before we get too deep, a word of caution. This report contains forward-looking statements. Essentially, these are educated guesses about the future, and American Rebel wants to make it crystal clear that things might not go as planned. We should keep that in mind as we move forward. They are basically saying things might go south. The company says its success depends on many things, such as being able to manage debt efficiently, compliance with the listing standards of Nasdaq, and remediating material weaknesses in the company's internal controls over financial reporting. We'll talk about what those risks mean. In an interesting move, the company launched American Rebel Light Beer regionally in mid-2004. They're partnering with Associated Brewing and have even created a separate subsidiary, American Rebel Beverages, to handle the alcohol licenses and operate the beer business. This is a bold move trying to capitalize on their brand and lifestyle. We will see what the initial response will be. Now, let's address the legal matters. There's a complaint filed by Liberty Safe alleging trademark infringement. American Rebel plans to defend the complaint while continuing to work with Bank of America on a settlement. Lawsuits add uncertainty and cost money. Unfortunately, that's not the only legal hurdle. Champion Safe Company, one of American Rebel's subsidiaries, received a notice of default from Bank of America regarding a credit facility. Now, Bank of America is actually suing the company. Now let's dive into the numbers. Time to see if the company is doing well based on what they're telling us. This is where things get interesting. Let's take a look at their balance sheets. I will point to some key figures here and let you know whether it is good or bad. Accounts receivable, or the money owed to American Rebel, decreased from about 2.7 million to 1.2 million. That's a pretty big drop, suggesting sales are either down or they're having trouble collecting payments. Inventory also decreased, implying the company's selling through existing products rather than stocking up. Property and equipment decreased from approximately $360,000 to approximately $274,000. This typically means a company is not buying a lot of new equipment. They could be renting, which might be better for cash flow. Other assets increased significantly from 1.7 million to 3.4 million. It's mostly coming from lease assets, which are now required to be on the balance sheet. On the liabilities side, things get a bit more concerning. Current liabilities are up a lot, jumping from 6.9 million to over 15 million. This was driven by a massive increase of loans, working capital net. What does this mean? Basically, they need loans to keep operating day to day. Another contributing factor is the accrued interest, which means that the company is delaying payments. The end result is stockholders' equity takes a massive hit because of the liabilities and is at a negative. This means that the liabilities outweigh the assets. Revenue declined from 16 million to 11.4 million, and because expenses didn't decline as much, it resulted in a gross margin that went from positive to negative. Most of the expenses for the year increased as well, with administrative and other having a big jump. However, compensation has decreased quite a bit, showing that they're at least trying to reduce spend in those areas. The final result for net loss almost doubled, from 9.7 million to 17.6 million loss. As you can see, things are not going well. Now let's take a look at the statements of cash flows. We have net cash used in operating activities. So not only did they lose money, they also used money. Cash at the end of the period is down nearly 800K year over year. Okay, there is something else that I find worth mentioning. Check out this risk factor. Stockholders' voting power and ownership interest may be diluted significantly through our efforts to obtain financing and satisfy obligations through issuance of additional shares. In short, if they need to raise money, current shareholders could see their holdings become worth less because the board of directors have the ability to issue shares of common stock, preferred stock, warrants, or options to purchase shares of common stock or preferred stock. There's even a risk factor discussing our failure to timely file certain periodic reports with the SEC. This is when a company is too late submitting something to the government. That is not a good sign. So what's my take on American Rebel? The numbers tell a story of a company struggling, sales are down, losses are mounting, and the balance sheet is deteriorating. It is struggling as revenue fell far short and debt is growing. Despite any marketing that the company does, those numbers are the numbers. One thing that needs to be taken into account when trying to see if a company like this will work is regulatory changes. The company is facing potential future limits on gun ownership and demand for firearms may decrease. We can't say for sure if it will happen. The company itself recognizes issues it has, such as risk that the company will not be able to remediate identified material weaknesses in our internal control over financial reporting and disclosure controls and procedures. The company recognizes that maintaining compliance with NASDAQ is a risk. If American Rebel can really capture that patriotic brand image, maybe, just maybe, they can turn it around. But the clock is ticking and they need to address those financial weaknesses fast. That's the breakdown for today. If you found this dive into American Rebel's 10K insightful, be sure to smash that like button, drop a comment with your thoughts, and subscribe for more corporate deep dives. I'm curious to hear what you think about American Rebel's future. Thanks for watching.